Welcome to Financial Edge by Honest Accounting Group. I'm Enoch Garcia, QuickBooks Advisor and Lead Accountant at Honest Accounting Group. If you need help with bookkeeping, QuickBooks, or cash flow management, please visit honestaccountinggroup.com to schedule a free consultation. You can also find me on LinkedIn under Enoch Garcia. Now let's get started. Okay, so in this video, we're going to go over how to manage and use undeposited funds the right way to avoid issues. This is one key issue that clients tend to have. So, okay, let's go on the left-hand side under sales and let's go to customers. And here under customers, we'll have the name, company name, phone number, etc. And we have an open balance. So step one is we have to receive a payment. So there are two ways to do that. We hit receive payment here, or under new, we go to receive payment. These, even though they're the same option, two different things happen. So if you go to receive payment here, the customer's automatically selected and therefore the open invoices are readily available. If you go through new, receive payment, you will have to type in the customer name. It will be completely empty. Okay, so it's completely up to you on how you want to do that, but let's do receive payments here. Let's assume that the invoice balance is 954. Okay, and we received the payment today. We're going to do a check. I'm going to type in a random check number. Okay, so we have all the details there. If we want to write a memo, we can do so here. And if we want to attach anything, we can do so there. But here we have two options. One is we use undeposited funds or checking. Now, rule of thumb is if you're depositing multiple checks and your deposit slip has multiple checks, then do undeposited funds. Okay, because the undeposited funds becomes like a holding clearing account to which we will make a final deposit. There will be an additional step we will have to do. Now, if I were making a deposit for just this one payment of $954.75, and when I receive the bank statement, and I'm going to see $954.75 as a line item, then I can go ahead and just hit checking, and in the bank feed, we'll see $954.75, and it will clear. But let's assume that we're going to have multiple checks that we're depositing, $954.75 being one of them. Okay, so we have undeposited funds, save and close. Okay, so now that's gone, and I'm going to make one more deposit, and again, check, random check number, undeposited funds, same day. Okay, save and close. Okay, so now when we go to our balance sheet, remember that the deposit date was 8/20. 8/20. Okay, so if I were to do, let's see, by days, and let's just do these 2 days. Okay, so hypothetically, yesterday the undeposited funds balance was 2062.52, and then we did those two checks that we received today. We can see that the balance increased. Now, the last step that we have to make in order for this to be cleared out is go to new, make the bank deposit. Okay. Now here we select the account that the checks were deposited into. So in this case, we're checking account, and let's say it was today as well. And here we have the two checks that we selected. So we select the checks that were deposited in the bank. So they add up to $1,583.85, right? So in the checking account, and there will be one line item for this amount. In the bank statement, there's going to be a line item for this amount. There will not be a line item for 954.75 nor 629.10. The line item is going to say 1583.85. So this is the reason why we use undeposited funds because it's a holding account for all of the checks that we're making a deposit into. So again, this is the amount that's going to clear in the bank. Okay, so deposit into the bank account, the checking account on this date. These are the two checks that we deposited in our uh, bank deposit slip. Total was $1583.85, which includes these two checks. All right, now we can hit save and close. And as you can see now, once we made that bank deposit, the balance dropped again to what it was yesterday. So just for clarity, today we made a deposit. We received two payments, two check payments, which increased the undeposited funds balance. Yesterday we did not have those. So the balance went up, and then when we made the bank deposit, it went back down. Okay, so it's important that you do this correctly and that you do it consistently every time. Otherwise, this balance continues growing and growing and growing and growing. I have seen clients that end up with balances all the way to $500,000, $800,000, and really, it's not good for your financial statements because your total assets are going to be overblown by that amount, overstated, and in reality you don't have those funds anymore. They were already deposited into the bank account. Okay, as we can see here, the bank balance was 1200 the day before, and then today we made that deposit. So the logic is this: when you create an invoice, accounts receivable increases. When you receive the payment, you deposit those funds into undeposited funds. Okay, so this increases. And then once you make the deposit, the bank increases. So accounts receivable increases when you make the invoice. It decreases when you make the received payment, and then increases undeposited funds. And then undeposited funds decreases and increases the bank account when you make the final deposit. All right. If you have any questions, leave them in the comments below. If this was helpful, give it a like. And don't forget to subscribe. Until next time.